So in today's video, we're going to be going over the latest quarterly report for Meta. Meta is the largest holding in my portfolio, and I've been an investor in the company since 2021. So for over 4 years now. It hasn't always been easy to be an investor in Meta since the stock crashed in 2022. But if you looked at the fundamentals of the company back then, you could see it was a really high quality business, just experiencing some short-term problems. And if you're able to take advantage of those kind of opportunities in the stock market, you can make a lot of money. Now, my current shares of Meta are worth about $30,000, but I've sold off slowly while buying other stocks. And I calculated it, if I would have never sold a single share, my shares would be worth over $60,000. So it just goes to show you that holding high quality companies in the long term will always be the best strategy. Let's take a look at the key ratios for Meta, which I monitor for all of my portfolio companies and the companies that I have on my watch list. Now, if we start with the free cash flow, we can see that only 6% growth for the last year, which is not very impressive. But if we zoom out a little bit more, we can see that the 3-year free cash flow growth rate is about 15%, and the 5 and 10-year over 20%, which is very strong. And if we continue here, we could see that the enterprise value to free cash flow and price to free cash flow is about 30. So I would not say that Meta is undervalued, but nothing crazy going on in the valuation. Now, Meta is very strong on the return metrics, where you can see that the return on invested capital is 36 compared to the 5-year median of 35. Return on capital employed has improved a lot, up to 34 compared to the median of 26. And it's the same thing with return on equity. We could also see that return on incremental invested capital, which is a metric that I've just recently started to track, but it's very important. We could see that for the 1 year, 3-year, and 5-year, that metric is very strong with Meta. And if we look at the margins, we could see the gross margins are very juicy, like with most software companies. It's 81% and has been very stable for the last 5 years. The operating margin has actually been getting better, going from the average of 38 up to 42. Free cash flow margin is hovering around the 30%, which is very strong. And the company has a very healthy balance sheet with a current ratio of 2.6, debt to equity of 0.2, and interest coverage of 88, which I think the average for S&P companies is probably around 6 or 7. So not a lot of risks in Meta when it comes to the balance sheet. And they've been giving money back to shareholders as well, where we can see the 3 and the 5-year share buyback ratio is 2.6 and 2.7% respectively. The revenue growth has also been strong, 20% for the last year and 15% for the 3 years and a 20% CAGR for the last 5 years. Now, they're obviously a very large company with a market cap of 1.6 trillion, but I do think that Meta really has a bright future if you just look at the financial numbers. I think it's very interesting to compare the total annualized return for the last 5 years, compare that to the free cash flow growth, which we could see earlier was around 20% for the 5 and 10-year. And we could see that the returns, the CAGR for the last 5 and 10 years is also 20%. So these do go hand in hand over time, although they do tend to diverge quite a lot in the short term. And we can see here that the stock compensation of Meta is very high, 17 billion compared to 52 billion of free cash flow. So that is something that you just have to accept as an investor if you're going to invest in Silicon Valley based companies. Their cash conversion is really good. You could see free cash flow per share is 20 versus EPS at 25. So about 80% cash conversion, which tells you that their earnings are high quality. And finally, we can see the price to free cash flow. The 10-year median is 30, which is similar to the current valuation. Now let's move on to the press release to see the high-level overview of how the first quarter of 2025 turned out for the company. We could see that revenue growth was strong at 16%. Operating margin is higher at 41% compared to 38% in 2024. We could see that net income rose by 35%. But like we saw earlier, the TTM numbers, the trailing 12-month numbers, are only 6% growth in free cash flow. But we do know that Meta is investing a lot in CapEx. How much of that is maintenance CapEx is really hard to tell. So I just like to be conservative on the underwriting and just look at free cash flow. And if we move on to the KPIs of the company, we could see that family daily active people, DAP, saw an increase of 6% year over year, which is really impressive if you think about it, since they have over 3.4 billion users. So they're kind of running out of people in the world to add to the user base, but still they are growing. The ad impressions, they went up by 5% year over year, and the average price per ad went up by 10% year over year. So we could see that Meta has a significant pricing power in their business, which is a positive for shareholders. Now they had decent capital returns, share repurchases of over 13 billion, and total dividends paid were over a billion. Like I mentioned earlier, they have a very strong balance sheet where they have cash and cash equivalents of 70 billion, and cash flow from operating activities was 24 billion and free cash flow 10 billion. Here we can see the development of the advertising revenue by user geography. And if you just look at the total numbers here, we can compare Q1 of 2025 to Q1 of 2024 and 2023, where we can see a significant increase. And we can see here how advertising revenue has been growing, while the Reality Labs revenue is not that significant, and the losses from Reality Labs are really huge, where you can see the loss just in Q1 of 2025 was over 4 billion, and this has been steadily increasing. But this is obviously a long-term project for Mark, and he believes that this will yield good returns for shareholders in the future. Personally, I underwrite Reality Labs at 0 because I don't know how it's going to go. Maybe they'll just shut it down in a couple of years after spending billions on it. So while the core business is healthy and growing, I'm not really concerned about Reality Labs. But of course, shareholders have to see return someday. You can't just keep spending billions and promise return sometimes in the far distant future. You can see the massive scale here of Meta. This doesn't look really impressive if you look at it just quickly. But if you think about it, you can see that in just 2 years, they've added about 400 million people to their family daily active people, which is massive. So we can see that the core business still has a lot of potential. And it's the same thing with family average revenue per person, which is an important KPI. If we compare Q1 of 2025 to Q1 of 2024, we can see a decent increase and a very good increase from the $9.40 in Q1 of 2023. And if we compare the cash from operations and the free cash flow of the company compared to the same time last year, we could see a healthy growth in cash from operations going from 19 billion up to 24. But they are spending a lot on CapEx, so the cash flow is actually lower at 10 billion compared to 12.5 a year ago. But again, if we zoom out a little bit, we can see the significant growth going from 13 billion in cash from operations and about 7 billion in free cash flow up to 24 billion in cash from operations and 10 billion in free cash flow in just 2 years. That's very impressive. And finally, I have for you my takeaways from the earnings call and the Q&A, where I thought this was really interesting that Threads has reached 350 million monthly active users. And we could also see that WhatsApp has 3 billion monthly active users and Messenger over a billion. And all of these platforms are yet to be monetized. So very exciting future for all of these platforms, WhatsApp, Messenger, and Threads. And I thought this was very interesting as well, seeing that I've been dabbling in vibe coding myself and have been doing some programming where I created a game. I'm also creating a SaaS tool now that is supposed to be a stock analyzer using my 130 or 40 items that I have on my checklist and make the AI go through that. Where Mark Zuckerberg is asked on the process of AI replacing mid-level engineers and internal traction. So he says here that the company is on track for AI to reach mid-level engineer capabilities by mid to late 2026, with significant R&D contributions expected by then. So this is very interesting that Facebook will be able to lay off a big portion of their engineers and just replace them by AI. And what's incredible about this is also just the speed of the progress. This is happening much faster than I think most of us anticipated. Another thing that I found interesting was a question about the expected modification and financial implication of the DMA ruling. The DMA is Digital Markets Act from the European Union. It's like they say, America innovates and Europe regulates, and that's very true for Meta. Um, Europe and the EEA plus Switzerland is about 16% of the 2024 global revenue. And Meta might start to feel the potential effects of the DMA ruling in Q3 of 2025. Um, but right now, they don't really have a lot of clarity on it. And the DMA ruling does pose a significant risk to European revenue. We're still waiting to see what happens on that one. But that's definitely something that shareholders need to monitor because obviously it's going to affect the revenue of the company going forward. And like I talked about, shareholders are concerned of what management is doing to reduce the consistent $4 billion quarterly losses and the timeline of the expected return on all of those investments in Reality Labs. The management team says here that losses will persist until sufficient scale is reached, after which Meta will focus on monetization, similar to what they've done on other products, but they gave no specific timeline. But glasses growth is a near-term priority. So basically, they're just telling us that they're going to keep plowing money into this thing until it reaches a scale, which could be in 2 years, could be in 10 years. It's really hard to tell. So we just have to continue to trust the management team like we've been doing or I've been personally doing for the last 4 years. But that's it for the video today. I do want to thank you for watching. Remember to like the video and subscribe to the channel if you haven't already.